Is the bull market back, or is this just a relief rally, a little bit of a bounce? Let's take a look and see what is going on today. The markets are showing a little green today. The Dow is up across the board. Dow Jones is up 1.4, S&P is up 1.4, NASDAQ up 1.23, and this is as of 2 p.m. Eastern Standard Time. So we will see where the market closes. It's down off the highs a little bit. And it was down pre-market. So been kind of all over the map here the last few days between the opens and the closes. But we'll see how the investors feel going into the close, if the markets can hold their gains into the close today, or if we see some selling into the close. The real question is, what is causing this rebound here? And it's two things. One, obviously technicals, since the markets, this is Bitcoin on the daily, but since markets are testing, well, the Dow is broken below the June low, but it's kind of testing this pre-pandemic high, kind of bouncing, up and down there to see if that's going to break. And then, of course, with the NASDAQ, has not reached the pre-pandemic high level, but bouncing right here, just above the June lows. S&P kind of just below the June lows, testing that to see if it can find support back above it again. So markets are basically testing these June lows and pre-pandemic levels. And the other thing is speculation on a Fed pivot based on what the Bank of England did with the bond market over there and their pivot and intervening in markets. So that's generated some speculation that the Fed is going to have to pivot with what's going on here. But the Fed is not going to pivot. They can't pivot. They've got inflationary problems. They're going to keep going until something breaks. They're going to let it break, see what happens. And if the market can work itself out, they're going to let it go as far as it can go, working itself out. The only thing we don't know are, what are the black swans out there? What are the systemic risks and cracks out there lurking below the surface and behind the curtains that we don't know about? We can't anticipate, and how big can the damage be when that happens? And I'm talking about credit markets, corporate debt, consumer credit, things like that, and potentially the bond market as more stress and margin calls happen there. So a lot of risks out there still. And then, of course, you have the war in Ukraine. If Russia decides to throw a nuke on the battlefield, that's going to get ugly real fast, and that's going to create a market event like we haven't seen in a long time. Then you have Stanley Druckenmiller out, and talking about the recession is going to be much deeper than everybody thinks going into 2023. So still a lot of uncertainty out there. But at the end of the day, right now, the markets are just finding a little bit of footing here, testing these levels and getting a little bit of a relief rally before we continue further downward. Bitcoin wrestling with this 2017 high, popping up above, below, just kind of finding rejection there, not able to get above and confirm above it, and likely will not until we get some sort of resolution in the traditional markets with interest rates and interest rate policy, recessionary concerns and issues, and resolution there. And of course, a retest of these previous lows, which Bitcoin is most likely, in all probability, going to retest those lows, potentially break below. How low, we don't know yet. There are some different thoughts and theses on that in terms of where the liquidity zones are, how low it could go. And of course, the global macroeconomic environment will play into all that. In other news, Pantera Capital is seeking to raise $1.25 billion to deploy by next May of 2023 for its blockchain fund. This is Dan Moorhead, and they are looking to raise money for its second blockchain fund, tapping into growing appetite for digital assets among institutional investors, even as prices swoon. So this could be a lot of marketing and positioning here in order to kind of drive interest into the space. A lot of promotion, trying to keep interest coming in, capital coming into the space. But anyways, he's going to close the fund, which will invest in equity as well as digital tokens by May of next year. So that'll be interesting to see. We want to provide liquidity for people that are kind of giving up, because we are still very bullish for the next 10 to 20 years, he said. And then on another news today, FTX is at it again, considering bailing out Celsius via an asset bid. Acquiring the assets of Celsius would imply FTX's intent to save the lending firm, similar to what FTX US did for Voyager by securing the winning bid for approximately $1.4 billion. Crypto exchange FTX FTX led by Sam Bankman-Fried, is considering bailing out the Celsius network the same day that Alex Mashinsky resigned. So now that Mashinsky is out of the way, I think you can start to see some resolution come into Celsius for all of those investors. So hopefully somebody can work something out there to help make people somewhat whole, or at least get some sort of portion of their investment back. So that'd be a great thing. So anyways, here's Bitcoin on the daily. Nothing new there to talk about. Still kind of consolidating here, testing this range, liquidating longs, liquidating shorts. Shorts and long liquidations going on here, and just trying to keep its footing right now. Ethereum, same thing, just about unwinding that big move on the ETH merge, continuing to work its way down. And, similar price action across the board with all the major altcoins, just kind of hovering on this level, waiting for the markets to make their move, traditional markets to signify and signal that next leg down in the cycle. So right now, there's still a lot of uncertainty, a lot of risk. This is not bull market on. This is not Fed pivot. The Fed is still hiking. The Fed is still coming out saying our target is 4.25 to 4.5 by the end of the year. That their inflation is their number one concern. They're not worried about recession. They're not worried about markets. They're not worried about the housing market. In fact, they are getting what they want. You're hearing a lot of talk coming out of Wall Street, talking heads like CNBC, trying to put pressure on the Fed, trying to criticize them, tell them they've gone too far, too fast. But this is what the Fed wants, because inflation is not coming down. And all of us that are out there in the day-to-day activities of the world know that. And we can see it. We haven't seen anything come down except gas. And I think gas is ticking back up here again. And there's speculation that it might get back up to those previous levels that we saw earlier, going into the fall and winter with energy prices and things like that. So still a lot of risks out there, still a lot of time. You want to be cautious. Obviously, there's moves out there that you can make in and out, but you got to be very careful. This is not the time to jump in head first, feet first, or anything like that and just start buying. You want to make sure that the all clear has been given by the Fed, meaning inflation has come down to that 2 to 3% range. The Fed is going to maintain interest rates above above inflation, which will bring it back to neutral. And they are not going to, or at least they're saying they're not going to let rates get below a certain point. We should never see zero interest rate again out of the Fed, but we'll see. That's what they say. What they do is a whole different thing. And unfortunately, they don't have much credibility because they've gotten it so wrong so far. So we'll just have to wait and see what happens right now, data dependent, day to day. But this rally, let's see if it maintains any kind of strength into the close, or if it loses its strength into the close. That'll give you an idea of what to expect. And more likely as we go throughout the rest of the week, if we're going to continue down and retesting and breaking those lows on the S&P and NASDAQ, the June lows, and then heading down towards those pre-pandemic highs where the Dow is currently finding support to see if it's going to break through there and start heading even lower. So a lot of stuff going on out there, a lot of headline risk, as any kind of good news can exponentially spike markets and assets, and any kind of bad news can do the same in the opposite direction. So these are the things I'm looking at. I'll see you in the next video.